In this video, I'm going to be talking about the different types of mutual funds that we have. In my previous video, I've already explained what mutual fund is and the different types of mutual fund we have. But this one is a must watch if you want to invest in any kind of mutual funds because we have different types of mutual fund, and if you're not careful, you might just go ahead and buy any one because you don't know what they all entail. So in this video, I'm going to be telling you the different types of mutual funds we have, how you will identify the one that is best for you, and what each one entails, so that at the end you know what you're investing in and what to invest in particularly. So subscribe, like, share. Let's get into it. The first one I'll be talking to you about in no particular order is equity fund. On your platform, you might also find this as an aggressive fund. So it's that is equity fund or is an aggressive fund, whichever one you find on the platform you're using. So what exactly is equity or aggressive fund? Now, from the word equity, equity is anything that has to do with shares and stocks. So it means that this particular type of fund, they are more invested in equities. Now, don't forget that in my previous video, I told you that mutual fund is the pooling of resources together, different people bringing their funds together, handing it over to a professional, and the professional now invest this money for them. So now when you hand your money over to a professional to invest for you and you plan to invest in equity fund, what they do with your fund is about 70% of that funds that you're investing goes into the stock market. So whatever happens in the stock market has a driving effect in your portfolio, and the remaining 30% goes into fixed income instruments like commercial papers, bonds, treasury bills, all those fixed income investments. That means the equity fund has an exposure to the stock market, and anything that happens in the stock market is going to greatly affect your portfolio either positively or negatively. It's a high risk, high return investment because it has most of its investments in the equity market. The higher the risk, the higher return. So this one has more risk and it also gives you more return. And it's for those who have a high risk appetite. Those who have large risk appetite, that means that you can afford to take risk. So if you cannot afford to take a risk on your investments, this equity fund might not be for you. You might just find another one that is for you as you continue to watch this video. So another one is, it is perfect for long term. You might not get a reasonable profit or a reasonable increase in the short term, but if you are staying in this market for a long time, then you will have a good reward for your investments. Another one is that it does not have a fixed return. Yes, if you look at the stock market does not have a fixed return. You don't even know what you're expecting after you have invested, but you know it can either increase and it can reduce. Only that when it increases, the increase might be more compared to other forms of mutual funds. However, it does not protect your capital. Peradventure, there is a decline in the stock market, which is going to affect this particular type of mutual fund. Another one is, it is good for capital acquisition. Why capital acquisition? Because this is not unlike another type of fund like the mutual fund where you can get passive income on a monthly basis. In fact, on a daily basis. I'm still going to get into that. Equity fund is not like that because you can't tell exactly how much you're expecting. So this might not work for a passive income, but it's going to work for capital appreciation. Another one is, you can start with just the minimum of 5,000 naira. So if you're thinking that you need 5 million, 10 million naira to start, no, start from where you are. It's a marathon, it's not a sprint. So with as low as 5,000 naira, you can get started with these investments. And another one I said is investors with high risk appetite. I think I mentioned that earlier. You have a high risk appetite that you can afford to take a risk on your investment, then this might just be for you. And most of the equity funds, the year to date, by year to date, I mean from January to now, I've returned over 40% on the investment. So you understand what I'm talking about when I'm saying equity fund, that it has a high risk, high return. If you have 40% increase in your portfolio just from January till now September, you can understand what that means. Unlike some other funds that you can't even get, no matter what happens, you can't even have up to 25% in your portfolio. So this is a high risk, high return, but at the same time, it doesn't even preserve your capital if there's going to be a loss on this particular investment. So what exactly is money market funds? Money market fund is a low risk financial instrument. What they are invested in are fixed income investments. Now, by fixed income investments, these are instruments that when you invest in them, you have an idea of what the returns you're expecting in. So for instruments like treasury bill, commercial papers, bonds, fixed deposits, All of this, you know what you're expecting the moment you are investing in them. Now, let's go into what we need to know about money market fund. Money market fund is a low risk financial instrument. So this is for those who have a low risk appetite. So if you know that you don't like to take so much risk on your investments, money market mutual fund might just be for you. Another one is for conservative investors. So if you know you are conservative, money market fund might just be for you. And that is what I mean by conservative investors. By conservative, it means that you don't want to take high risk on your investment, which means you have a low risk appetite, you don't like to take so much risk. Another thing is this is a safe form of instruments. Unlike equity fund I mentioned the other time, I said with equity fund you use a higher risk, higher reward instruments, but this one is a low risk, low return instrument. With the equity fund, it can return more than 40%, depending on how well the stock market is doing. But with mutual funds, it cannot return that because it's solely dependent on fixed income instruments. But this one is safe. When you invest, there's no risk on your capital. Unlike the equity fund that there is a risk on your capital if the stock market is not doing. It's a short to long term investment. What do I mean by short to long term? If you choose to have it as a short term investment, then that would be a decision on your own. If you choose to have it as a medium or a long term, it's something that you have to decide on your own. Why? Because it has a holding period of just 14 to 30 days, depending on the platform you're using. Some platforms will tell you to hold for 14 days. Others can say you should hold up to 30 days. Now, by holding days, it means that you must hold these investments for a minimum of 14 to 30 days before you can redeem what you have inside it. So it means that after 30 days, if you want to withdraw your funds, you can withdraw both your capital and your interest after 30 days. That is why I said it could be a short term. And if you want to hold for a long term, it's such that it compounds. After holding this for 3 months, the interest you already have in your account for 3 months now adds up to your initial capital. Then you begin to get interest both on your capital and on the interest you already hold. So it works perfectly if you want to compound your interest. It can be for passive income, just like I said that. Say for instance, if you have like 30 million in your portfolio, it's going to return a minimum of 500,000 naira to you every month. So if you choose to withdraw your 500,000 naira, you can withdraw this on a monthly basis for the next 12 months or as you so wish. And if you don't want to withdraw, you can leave it in your account and allow it to compound. So this your interest also generates another interest for you. Another one is redemption is redeemed for 24 hours. So if you want to redeem your funds, by redemption it means that if you want to withdraw, it's so easy and fast that if you place a withdrawal, you get your money back in your bank account within 24 hours. This is good for beginners, for those that don't even know anything about investing. This is conservative, so you don't get to lose your money, you don't get to lose your capital, you don't even get to lose your interest. You have both your capital and your interest. So if you are just starting out, you don't know how to invest at all, you don't know where to start from, you still want to start getting knowledge and you want your funds to use something for you, then this is an instrument that you want to consider. You might want to consider money market funds. So it's good for novice investors or a beginner investor. With as little as 10,000 naira, you can get started with this type of mutual funds. Money market fund will return about 20% return on a yearly basis, depending on the platform you're using. Some will return like 19%, others can return between 20 to 23%, depending on the platform you choose to use. If you like this video so far, click on the like button and subscribe because you have a lot of benefits from this channel. Then I move into the third type of mutual fund. Another one I'm going to be talking about is the ethical mutual funds. From the word ethical, it means that this type of mutual fund has certain categories of things that it doesn't invest in. It's synonymous with the equity fund, which invests in the stock market, but the major difference is that it doesn't invest in things like tobacco and brewery. So this particular type of fund is perfect for those who are religious investors who do not want to invest in certain type of things that are against their beliefs, especially those that like to invest in alert-based investments. Like I said, it's synonymous with the equity fund. It also has majority of its investments in the equity fund and 30% in fixed income instruments. It does not invest in breweries or tobacco. It has a holding day of 90 days and the redemption period is 5 working days. So this is perfectly synonymous with the equity fund, only that it does not invest in breweries and tobacco. Another one I'm going to be talking about is the fixed or bond mutual fund. Now, this is synonymous also with the money market fund. What differentiates it is that it has a holding period of about 90 days, which is different from the money mutual fund that has a holding period of just 30 days. So the fixed or bond mutual fund invests in majorly bonds and fixed income assets like the government bonds, the federal government savings bond, the federal government bonds, sukuk bonds, corporate bonds, different types of bonds. Now, this is for those who are also conservative, just like I mentioned for that of the money market fund. It has a slightly higher return than the money market fund, and it has a slightly higher risk than the money market fund. So if you are the type that you fall in between the high risk and the low risk, if you are the medium risk person, then this one might be perfect for you. You don't want the risk too high and you don't want the risk too low, which means the return is not also too high and the return is not also too low. Then you might want to choose the bond or fixed mutual funds. It has a holding period of 90 days and like I said, is a medium risk investment. Unlike the money market fund that is a low risk and the equity fund that is a high risk, this is a medium risk investment. Another one that we have is a balanced fund. Now let's take a look at what balanced mutual funds entails. So for the balanced mutual fund, it has 60% of the investments in the equity market and 40% in other fixed income. Don't forget that when we treated equity funds, we said it has 70% in the stock market and 30% in other fixed income. For the balanced, it has about 60% in stock market and 40% in fixed income markets. So it helps it to be balanced. Now take note that when I say 70%, 60%, so it means that it's at the professional discretion of the fund managers. They might decide to make it 50% and this 50%. But the maximum it can go because of the exposure to risk is 60%. So the maximum it can invest in the stock market is 60%. It's a medium to high risk investment. You can see that this is not a low risk investment, it's a medium to high risk investment. It's also perfect for long term, just like the equity fund, and it has a holding period of 91 days. So it means if you are buying into the balance fund, you have to hold for a period of 91 days before you can withdraw both your fund and your interest. Another one that we have is the guaranteed fund, and let's go into it very quickly. The guaranteed fund has 70% of its investment in bonds, 30% in money market instruments, and a maximum of 5% in equity fund. Now, it's based on the professional prowess of the fund managers to know how to fix this. So this could be less than 70%, but not more than 70%. This is a maximum of 5%. So the professional managers know what is best for this type of fund. But this is what they invest in basically. It's also a low to moderate risk because it does not have a good exposure to stock market. So just note that any fund that does not have a good exposure to the stock market is not going to have a high risk. It's not going to be a high risk mutual fund. It preserves your capital and the holding period is 91 days. And if you want to redeem, it takes about 5 working days to redeem your funds. And the last one I'm going to be talking about in this video is the specialized fund. Just to make it quick, specialized funds invest in sectors. So they have particular sectors they are concentrated on. They are also well invested in the equity markets, but they focus on sectors rather than investing in just anything in the stock market. I've mentioned different types of mutual funds. Which one can you remember? I would like to know in the comment section which one you believe suits you now. So let me know in the comment section, and if you have further questions, reach out to me from the comment section. I'm going to answer your questions. See you in my next video and stay blessed.